Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, Landon.
Thanks for having me.
All right, so we're talking Costco. I mean, this thing's been a rocket ship over the last year. I don't know why nobody, remembered that at the end of 2022 into 2023 because it was lagging a little bit. But this has definitely been a pandemic winner, but this has been that retailer that's been able to sustain that momentum. Landon, do you have the data that backs up oversold condition or overbought conditions in this name going into these results?
I mean, this is an unbelievable company. I mean, the stock is just tearing up. We got all-time highs right now. I mean, we're what, 780, 781, something like that.
Yeah.
And everything that we've got is fairly positive. Unfortunately, I mean, I'd love to come on here and tell you that the bottom's about to fall out and this is the time to buy puts, but it's not. You can always make the argument that it's extended. But you could have made that argument for the last 15 years on this stock. It just continues to go up and up and up. So when we look at it, we can see that the mentioned buzz, people talking about it, is up about 19% on a year-over-year basis, very strong. We know that e-commerce is doing really well, and it's a steady rise basically in everything that we're seeing. And one of the Kirkland brands, one of the stories that I think really needs to be told is that Kirkland brand is doing extremely well. Mentions are up 115% on a year-over-year basis, while happiness is up 11 points, which is pretty rare for us to see both things moving that well together. Usually you get, purchase intent or mentions moving up and happiness starts to pull back a little bit because expectations are so high. But this is, they're really pleasing customers with this Kirkland's brand. The happiness of the company overall is at 70%, beating Sam's Club slightly. Now, the only thing that I don't love about this company is that they report their numbers every month, which really kills the LikeFolio edge. We wish there would be more time in between reports so that we could get more of an edge. But instead of a 90-day or 3-month edge on Costco, we get basically a 1-month edge. So it's much diminished. But I can tell you that even when you compare to the really big competitors of Walmart and throw in Target and Amazon in there, the web visits even are have Costco leading the way. They're at plus 6%. The rest of them are down slightly. So, everything that we've got here shows that I'm not going to say that all-time highs are justified, but I will say that a bullish stance is definitely justified. So it's up to the investor if you think that all-time highs can be sustained or not. But, historically speaking on this company, if you would have bought at all-time highs, you'd be doing really well. So I can't tell people to sell here because everything that we've got is pretty positive.
Landon, this is a story of small percentages of a very big number is a very big number, right? And when their operating margins go from 2.9% to 3.3%, doesn't sound very sexy, but it's a massive number that goes up. But here's a reason to be a little bit hesitant. For the last 20 years, S&P 500 up 550%. Costco up 2,750%. How about this one? The PE currently on Costco is 53. Its 10-year average is 33, Landon. So I get how good, how popular, how efficient this company is. The membership model is a great model. But come on, Landon.
I hear you. I mean, this is just extension, right? It's just extension. And this is why I'm telling you, I really wish that I had numbers that were real negative because I'd be smashing some puts right now because it is so extended. But everything that we've got is pretty positive. It's kind of the outlier in an economy that's a bit strained with a strained consumer. With the bulk savings model, the membership model that they've got, all of the in-store discovery experience that we always see where people just kind of wander around and they end up spending more by far than they would have. They're targeting suburban customers who are doing well. They don't need to advertise that much. They got the $1.50 hot dog. I mean, come on, what's not to love about this company? Another thing that investors really want to look out for is, the membership is $120 a year. And the last time that they increased that fee was 2017. And they tend to do it every 5 or 6 years or so. And it's always an immediate boost to the value of the company because everyone just kind of shrugs it off and they pay what it is. So I wouldn't be surprised if we see that coming sometime this year. And when we get it, it's going to be a little bit of a boost. So we got that in store as well. But I agree, PE ratios, valuation, everything is getting really stretched. And if you love this company, maybe you wait for, buy the dip kind of situation. But this is, I'm not going to come on here and tell you that the data that we have is bad and we think that it's going to sell off tremendously. I just don't have anything negative on this company. Unfortunately, I really wish I did, because I love to short at overextended tops, but this is not one of those situations.
Right. RSI near 80 level at this point, so overbought on a technical basis. But hey, I'm not going to bash against Costco, Landon, at all, because I love going there. And you're right. If you go in there for one or two things, if you can get out of there for less than $400 or $500, that's amazing. But you can't. But Landon, I wanted to kind of readdress the membership fee, because they make a lot of their profitability is based on the fees that they charge. You mentioned the 120. I believe that's a family executive membership. They typically, every 5 years, raise those rates about 5 to 8%. They haven't done it. They cited the fact that people are going through inflationary pressures in the pandemic and everything else. They don't need to hike that right now, Landon, just because of the data that we get on a month-over-month basis, right? So that's not going to really, I think maybe the expectations are that they are eventually going to hike, but they don't need to, just due to the fact that they're doing so well, right?
Yeah, absolutely. I mean, it's just going to be, I think, a bonus whenever maybe the consumer strengthens a little bit and they can justify it to just throw in a little bit extra on there. And that's just going to be more to the top line that they're going to bring in. So that will translate right to the bottom line in the stock price. Now, how much of that's baked in? Because there is historical evidence. I mean, there's data that says that they do this every few years and they haven't done it in a while. So maybe people are counting on that as far as the, investors counting on that as far as the valuation goes. So it's not a huge factor, but absolutely, this company, I mean, you can see just the comparison here between Sam's Club in red and Costco people talking about getting a membership. There's just no comparison. I mean, this is a giant company that doesn't need to advertise, that hits on all cylinders. I mean, you got people that go there because the gas is cheaper, and then they go in and they grab a couple of items and walk out with $500 worth. I mean, it's a fantastic business model. Again, really, really stretched right now, but if you fast forward 2 or 3 years, I'm sure that we'll be higher than 780. It's just a question of what happens between now and then. Maybe we dip on a good report. We saw what happened with Abercrombie. We had fantastic numbers coming out of them, but so did everybody. You get stretched that far, and it's tough to beat real expectations. So maybe they're sideways or down a little bit on this report, and on a good report, which is what we expect. And it could just be another buying opportunity for long-term bulls.
Unscientific poll I did on Twitter before we came on air. Would you cancel your membership if they raise rates or fees 5 to 10%? 10% said they would cancel. That's surprising to me, because they've got a retention rate over 95% on a yearly basis. Not a member, 31%? What the heck? Who's not a member of Costco?
Who's following you on Twitter or an X? That's the question.
Some guy living in a shed in Montana. I don't know. All right, great stuff, great data as always, Landon. Appreciate it.
Thank you, guys. Take care.
All right, this Landon Swan, co-founder at LikeFolio. I mean, you heard it, Kevin. It's hard to bet against this company because they continue, and the monthly data that comes out, is reflective of double-digit growth almost every month.